right, 6 minutes past 9. I believe it's a good time to open the curtains for today's market color. Um, Good morning, everyone, and we welcome you all to the session today. Today is going to be an interesting day for our conversations and discussions, given the topic that we seek to discuss or review today. Over the past few weeks, there's been a number of developments within our industry. And for that matter, we believe it is crucial for us to stay informed about the latest market developments, government policies, and their potential implications for our investments and strategies. Just last week, we had the 2025 budget being read. With its ambitious targets and reforms, presents both opportunities and also challenges on the other side. And so this morning, we are here to carefully analyze and understand the content of the 2025 budget, where we will focus on key highlights from the budget, including the government's revenue mobilization strategies, expenditure cuts, debt management plans, and their broader impact on the economy. We will also delve into the latest market trends, such as Treasury yield curve and the performance of the Ghana cedi. This call, let me remind everyone that it presents an excellent opportunity for us all on the call today to align our perspectives, ask ourselves critical questions, and also share our views on the same policies and developments that we will be discussing today, which we believe has a potential to shape our investment decisions and also even when it comes to our clients' advisories in the coming months. And so without wasting much time, I would invite our speaker for today, Daniel Laetete, a senior analyst with our Insights Research and Analytics Department, to take us through the market updates and also the review of the 2025 budget.
Ernesto, this post you are giving me there, that's very interesting. Yeah, I hope I'm audible. I'm audible.
Pitch it higher a bit and we will be fine.
Am I audible?
Great.
Yeah, awesome. Yeah, so thank you very much, Ernest, for that introduction. Like I always say, it's always a pleasure to be on this call. Today's a hot seat, but hopefully I can give you a little bit of insight to what was shared in the 2025 budgets. So as a team, over the past 3 months, since the election, we've been really tracking what government's push is, what's underlining themes that we've seen in government. We've also tried to follow every single top government official across every single platform across the country on what they've discussed, what they've said, and what color we can give to some of the numbers that they give in the budgets in the future, and that has come. In this presentation, we'll try and come from a different perspective than probably most other platforms have done in the past 1 week, and so on. So hopefully I can give you a lot of insights. I believe there's a lot of firepower on the call to answer most of the questions that are going to come. So hopefully we can have a very interactive session. Now, it's very important that when you try and look at what the budget really is, you look at where we were as a country, and that's by looking at 2024. So, what really is the backdrop? How did we really get here? In 2024, unemployment rate in Ghana was very high. It climbed from 3.5% in December 2023 all the way to 3.6%. So there was a lot of unemployment in the system. The good part of it was that when you look at government reserves and its import cover, it had very good buffers to be able to take care of imports for up to like about 4 months. Now, in the midst of all of that, inflation was also really high, ended the year around 23.8%. And there was a lot of economic hardship in 2024, even going all the way back to 2022. Now, all of that shaped what monetary policy perspective policymakers were going to take. So you saw them hiking rates for a very long time, and then somewhere in early parts of 2024, government policymakers dropped the rate to around 27%. We've seen then increase the CRR, try and introduce very innovative ways in trying to ensure that the disinflationary process continues. Now, all of that rate hike and monetary policy strategies have affected the levels at which people borrow at, right? So lending rates have been very high on the market, and businesses have struggled to access credits. Those that have been able to access credits have not been able to make repayments for them. So then you can see all of that translates in the non-performing loans that you have in the industry. If you look at the industry average, that's gone really high. Now, painting that picture and what the economy looked like, the real composite index of economic activity for Ghana, it climbed to 2.3%, which was very positive because for most parts of 2022 all the way up onto 2023, 2024, it was really in the negative. So that was the good part. Now, if you look at currency as well, currency, as always, there's not been a single year that the cedi has gained against the dollar. But in 2024 also, it exhibited similar characteristics. It did about 19% down against the US dollar, ended the year around 14.7. It had kissed around 16 cedis to the dollar somewhere in the year, but getting to the latter part of the year, that's really improved. Now, the key things that have been of conversation in public discourse has really been about government's debt position and the growth in the economy, because the numbers just really came out. Now, looking deeper at that, 2024, the numbers came out and it was really interesting for most people on the markets because most people weren't really expecting that year-on-year growth in economic activity or growth, real oil growth of about 5.7%. Because really from 2022 all the way down, it was very gloomy in terms of where Ghana's economy was headed. But at the end of 2024, the numbers came out pretty good, and real oil GDP was around 195 billion Ghana cedis. But if you look at this number at the top level, it doesn't really give you a clear picture until you drill deeper, looking at it on a quarter-on-quarter basis, or even looking at the fourth quarter numbers. So when we looked at the fourth quarter GDP number and comparing it to a year ago, that same period, so fourth quarter 2023, we realized that the economy didn't expand that much. It grew by about 3.6%. Now, if you put that in one basket and you also look at how well the informal sector did. Now in Ghana, the informal sector contributes roughly about 28-29% to Ghana's overall GDP. In 2024, the growth in the informal sector's contribution, or the growth in the informal sector in terms of production, it declined. In 2023, it was around 6%, and then in 2024, it dropped all the way down to about 4%. So that really was highlighting some of the problems, the underlying issues that we had in the economy at the time. With very high inflation, people were very skeptical about buying and other stuff. There were deterrents in the system because of the very high inflationary level. I've already spoken about that concerning the real economic composite index of economic activity. Now, on the other side, because we've seen very high pricing in the system, Ghana's nominal GDP numbers were very high. It came in the trillions. So it tells you the difference the price increments in the system have had on the growth that we are seeing as a country. Now, those were the structural problems with looking at the number at the very top level and not looking at what really down there was really influencing, or the real things that were really happening on the ground. Now you put Ghana's growth gloominess on one side and you look at what Ghana's public debt has been. Now, over time, our debt has been really upward. It's one of the main things that have been in public domains. People have discussed this a lot. It has informed and shaped people's perception of governments over time. We had a domestic debt exchange program. We've tried to restructure our Euro bonds. In 2023, where most of the DDP happened, you saw that government's debt still increased. So it increased from 446 billion to around 608 billion. Now, in 2024, that number still went up by about 19% to around 727 billion Ghana cedis. And all of these things, together with inflation, where unemployment was, where inflation was, where people were borrowing at lending rates, and all of those things really shaped up what people's perceptions were going to be and how they were going to exercise their franchise going into the 2024 general elections. So the opposition party then at the time, the National Democratic Congress, together with John Dramani Mahama, came up with promises to the people of Ghana leading up to the election. And one of the key highlights of them was that they wanted to run one of the leanest and most efficient governments in Ghana, because really the public discourse was around the fact that 100 and in the past it used to be like 100 plus ministers. It was reduced down to around 88 ministers. But then the idea was that why do we have so many ministers and why do we spend so much on them with a fleet of cars, etc., petrol, and that was really what was in the public domain. So he made it very emphatic in his 120 days social contract with the people of Ghana that he was going to run one of the leanest governments and most efficient governments in the Fourth Republic. He also mentioned that he was going to have a national economic dialogue just to see what everybody's view is about where the economy should go. He mentioned his 24-hour economy, mentioned accelerating export development council. He mentioned also he was going to cut some number of taxes, which most of the populace were aligned with. He was very inclusive in some of the things that he brought out as well, because he captured persons with disability, and he was very clear about what his view was in relation to healthcare. And then also he tried to, create room for the people at Abossey in terms of salvage vehicles by amending and reviewing some of the customs acts, etc. So these were promises that most people were aligned with, and you could see based on the results from the election that people were really aligned with it and people voted for the NDC. Now, the underlying theme that we've realized since this government came into power is the concentration on dialogue. Now, it's very important that you have this posture, because culturally in Ghana, people like their views to be heard. And even as a leader, even when you go lower to the secondary school, SRC, when you lose power and you're coming back to power, you really want to get what the sentiment is in the country, what people are expecting of you. And I was very intrigued. Previous governments have done same. The previous government met people and discussed issues about the economy somewhere around the UPSA, in the UPSA or the auditorium. But this dialogue and consistent dialogue conversations, it has a really different feel. So government has met industry, they've met the business class, they've met technocrats, they've met even market women, they've met the youth. And the underlying theme is they met all of these individuals in a very strategic way. So the youth, they met them on X, which is a very vibrant platform for the youth in Ghana. For market women, they were on the ground. The finance minister was there himself. And this sort of gives people a sense of belonging, that they are part of the shaping up or the resetting of the Ghanaian economy. For instance, if you enter somebody's house or compound and you're looking for someone and you don't greet, and you go looking for the person and you don't find them, the person, when you come back to the person, usually the person doesn't want to help you. So people always want to be consulted. It's a cultural thing that we have in Ghana, and it's very refreshing that a government that has started its tenure would like to do something of that sort. So it was a theme that we realized that we wanted to highlight. Now, in addition to dialogue and making sure that people's views are heard and making sure that you know what the people want, it looks like the government understands the current global dispensation that we are in. So in a current global dispensation where there's increasingly a fragmenting trade relationship across the globe, government has really been diplomatic at the very start of its administration, trying to consolidate some of the relationships that it already has. So we've seen that the president has been in Niger, he's been in Gambia, he's been to Senegal, he's been to Mali, he's been to Nigeria, and he's been also to Burkina Faso. Now, the question is, what does this really solve? When we drill deeper and we looked at the numbers, in terms of exports, from the trade export numbers that the Ghana Statistical Service sent out, Ghana does about 12% of its exports on the African continent to Burkina Faso. It does about 60% of that to South Africa. Now, what does it really export to Burkina Faso? So we have vegetables, we have iron and steel, we have chemicals as well, and all of that totals to about 5 billion Ghana cedis. So it's very important that you consolidate some of these relationships so that even as you are looking within, you also have outlets based on the current global temperature, right? So we also looked at what imports are and who do we really import from. So if you take away South Africa, where Ghana does about 19% of its imports from, so we import vegetables, vehicles, what else, machinery, plastics, and the likes. You look at Nigeria, and Ghana imports a lot of mineral fuels and oils. And you know that Nigeria has also set up an oil refinery. When you listen to what key government officials in this new administration are saying, they are trying to set up a new Tema oil refinery. So these strategic diplomatic conversations that government seems to be having across the African continent could augur very well for all of us, right? And we also looked at how much imports we were doing from Burkina Faso. We realized that was about 13%. What really are we importing from Burkina Faso? It comes back to vegetables, electrical equipment, etc. The backlash will be that why are we importing so much of these things from Burkina Faso, etc., when we can grow them in country? But then it looks like we don't have the capacity yet, and it's something that in the budgets and going forward from this slide I'll be explaining and giving light to. So that's the very clear picture, and I think one of the main reasons why it looks like the president was very close to the Burkinabe president is because of some of the sanctions that had been placed on cereals. So on 12 March 2025, Burkina Faso reversed its cereal export ban to Ghana. It was mainly by the intervention of the president. So conversations are happening. If this goes in the very right direction, you could see some of those effects play out in inflation and some other areas of the economy. So this is the backdrop even leading up to government reading its budgets. So it gave us a sense of proper planning and very strategic movements in governments, even leading up to the 2025 budgets. So like we all know, the 2025 budgets is titled Resetting the Economy for the Ghana that we want. The finance minister was very clear on the fact that these budgets would require some sacrifices. It would require truthfulness, it will require transparency, and it will require discipline. And they would have to implement very bold measures to be able to achieve all of this. Now, the first thing that people ask when you mention that a budget has come out in Ghana is, what really is the budget deficit? Now, government is proposing a budget deficit of about 43.8 billion. Now, if you look at the numbers from the budgets, Ghana seemed to have run one of the largest deficits in the Fourth Republic, about 93 billion, right? You look at the average between 2008 all the way to around 2023, and the average deficit has been around 14.9 billion. And you look at the number that government is proposing, even in this, if you take away this discrepancy, government is proposing around 44 billion. Does that really paint a true picture of where we were in 2019? So we decided to look at, okay, what's the average between 2020 and 2024, just to give some color. And we realized that the average deficit that the previous government ran between 2020 and 2024 was around 48 billion. So then this 43 billion is something that we can understandably work with. Now, historically, governments coming and they propose budget deficits that they want to run, but historically, most governments have not been able to achieve that. So, in 14 out of the 17 instances that we looked at governments' budgets and the actual deficits that they run, we realized that there were 14 instances where successive governments have missed their budget deficit targets. The only instances where they did not was in 2011, was in 2015, and the most recent one was in 2023, which was because we weren't making interest payments on some of the obligations that we had. So government's proposition seems like it's going to be achievable, looking at the fact that they were really in power between in the 2011-2015. Is this something that we can be hopeful of them being able to achieve? That's something that would all have to wait and see. But looking at the budgets from the face of it, it's a very ambitious budget, and the first time I read it, I had very good views concerning it. Now, what other things does government seek to achieve? Now, in 2024, government had an end of year target of around 15%, which it was really not able to achieve. Government now is proposing about 11.9 in relation to inflation. And despite despite this being very ambitious, the diplomatic things that we've seen in the past or in the very few months leading up to this budget could have significant effects. We've also seen some other policies that government has set up, the reduction in taxes, a push for agriculture, because at some point vegetables, fruits, etc. were playing very huge parts in the kind of inflation levels that we were seeing across the country. So that was the target in 2024. This is the target now. Now, government is not so bullish on growth in 2025, and that was very concerning. But I'm going to go deeper into that in subsequent slides, mainly because of the fact that we are coming from a place where we have done about 5.7, like I mentioned in the previous slide. So saying that you're anticipating growth to be around 4% is kind of some way. So that is something that we'll look at in subsequent slides. In terms of primary balance, government is looking to run a surplus of about 1.5%. It's looking to have import cover. Import cover is usually the same for most governments, 3 months and above is usually what they look out for. These are very ambitious targets, especially with the primary balance surplus and then with inflation. And the question is, how does governments really look to achieving all of this? What are their revenue numbers? What are their targets? What are the things that they want to achieve? Now, in 2024, just before we come to 2025, government's revenue really went up, right? So in 2024, government's revenue grew by about 37%, right? So all the way to roughly around 187 billion, right? And mainly of that was driven by oil and gas revenue because oil prices were very high, and then non-tax revenue as well. And even though we had shortfalls in grants and reduction, we didn't meet our expectations with ESLA receipts and non-tax revenue. The very high crude oil and petroleum prices really made us look good as a country, right? Now you look at what 2025 is and what government looks to achieve, and government looks to increase its revenue by about 21% between 2024 and then 2025, and that is in nominal terms around 38 billion. Now you look at the expenditure, and I've showed you the budget, the very huge budget deficit on commitment basis of about 93 billion in the previous slide. Now, what really went into this 2024 expenditure? And about 6% of it was from the compensation side. So government in 2024 paid more in terms of compensation than they had budgeted to spend, about 6%. Initially, the target was around 64 billion, and they did more than that. You look at grants to other government institutions as well, and that was the one that increased the most, around 17%, all the way to 46 billion thereabouts. Also, from the budget that was read, it looks like there are a lot of outstanding claims that have already been signed and undersigned by the previous minister, etc., of about 49 billion, which has all been accounted in some of these expenditure items that were in the budget. So a lot of spending has been done, and in 2025, government is looking to do lower than down. That cut its expenditure all the way from 279 billion to around 269 billion, and that's about 10.5 billion of that. So that reduction in percentage terms will be around 4%. Now, government has a lot of outstanding debts. You look at the budgets, and it's mentioned we have to pay the electricity company of Ghana owes about 68 billion, about 1.7 billion is owed to IPPs, etc., etc. So, how do they really intend to do all of this, right? We looked at some of the tactics that governments intends to employ within this period, and most part of it is downsizing government, reducing the ministers to about 60, which I mentioned in the 120 days promise that Mahama made to the people of Ghana. And then also they are trying to consolidate the energy and sanitation levies. So these are levies that are really charged on fuel that you buy at the pump. So they're trying to consolidate the energy sector levies and then the sanitation levies. And all of these are going to be used to cater for some of the shortfalls that we have in the energy sector. And then also to cater for some of the debts that I mentioned concerning ECG and the likes. So government has been very strategic. It's looking at what is already available, and for most people that have listened on concerning the 2025 budgets, they've characterized the budget as using very ingenious measures and very smart measures in trying to get us from where we were to where we want to be. Now, another thing that has been of very great discussion has been about the tax refund accounts, which in the first speech government mentioned was going to provide about 3.8 billion to government. Now we decided to look at what really the actual thing is. We went and looked for the Revenue Administration Act of 2016, and in that act the minister is expected to set aside not more than 6%. So in the language that was captured in that act, government has a leeway, so it can do between 1% to about 6%. So 6% is the ceiling. They're supposed to keep 6%, up to 6% of all the tax revenue or the total revenue that government receives during the period. Now what it means is that, let's say if you usually get tax receipts of about 100 billion, and you are supposed to keep about 6% of that, or about 10% of that, and you take that 10% and you put it in a tax refund account, that account you would not be able to touch it, right? So that money is not available for you to spend. Now what it looks like government is intending to do is that they are going to reduce the amount of money that should be allocated to the tax refund account and make that 2% available to themselves. So if every single year when your tax revenue comes up, you take the ceiling of 6% and you put it aside. Now government, and that money doesn't come back for you to be able to spend. Government is saying that, okay, won't do 6% anymore, we'll do 4%. So if your tax revenue stays at the same level, it means that you have more to be able to spend and be able to use in your developmental projects. So that really is the understanding in simpler terms of what that whole tax reform policy really is. So that's the explanation for that. Now, the other thing that they wanted to do was concerning the growth and sustainability levy. Now, this has been one of the levies that people have really talked about for a very long time. The levy has has taken different shapes and forms over time. In 2001, it was the National Reconstruction Levy. In 2009, it morphed into the National Fiscal Stability Levy. In 2021, it morphed again to the Financial Sector Recovery Levy, because at that time we had done the financial sector cleanup and we needed to make sure that we were robust enough, the financial system was robust enough. And then in 2023, the Growth and Sustainability Levy. So it's a levy, and there are sunset clauses. The sunset clause really means that those were the periods that it was supposed to end. Now, this Growth and Sustainability Levy was really supposed to end in 2025. And now government has extended that to 2028. It looks like it really is not going to end in 2028. If government wins power, it looks like that is really going to be extended. So for most of the commentary that I've listened to from Tax Law Ghana and other tax experts, the conversation really is take the sunset clause out and say that this tax is going to be there, or say that it's going to be reviewed every year, so that people know that this is what you are intending to do. So that has been increased from 1%. So it's in categories. There's a category A, and there's a category B, and there's a category C. The category A really is the banks. So when you look at the banks, financials, etc., you see growth and sustainability levy there. They charge them 5% on their profits before tax. If you go into the category C, which doesn't include category B. So let me talk about really category B. Category B is people in the oil and gas upstream extraction area, and then the mining companies. But this policy seems to be targeting just the mining companies. I don't know if with time more explanations will be done concerning that, but government looks to be increasing that 1% to 3% for them. And I saw some news outlets say that the mining companies were not so happy. I was following some of the conversation that emerged on the KPMG budget review analysis, and some very high-ranking government officials were there, and they mentioned that dialogue again has already been had with some of these mining companies. So it's really, they are not really complaining about it, and the government will be able to rein in that windfall from the increase in gold prices, because gold prices are really hitting all-time highs recently. Now, another revenue measure that government wants to introduce is the road tolls, and that conversation has been had in previous budgets, where people were saying remove the betting levy and the e-levy and bring back the road tolls, because we are not seeing progress being done in terms of maintenance, etc. Government says it's going to reintroduce the road tolls, as was said in the previous budgets. It's going to add some elements of technology, but it's going to engage again with the private sector to see how feasible that's going to be. Now, in all of this, government is not really focusing on tax revenue. It mentions some things on non-tax revenue in relation to property tax, etc. Now, also, they are going to have improved education on to increase tax compliance with SMEs, because it's very low, around 30%. So government is looking to do all of that. Now, we've spoken a lot about taxes. Why really is government concentrated on taxes? Now, we looked at how significant that portion was to government, and we realized that if this is 100% stack charts, about more than 80% of government's revenue is intended to come from tax revenue, and just about 20% thereabouts, or 15% thereabouts, supposed to come from non-tax revenue. So that's around 24 billion, and then other revenue source about 7 billion. Now, people, the citizens talk, right, that we are being taxed so much, but sometimes when you look at the tax to GDP numbers, it's not within. So the IMF has a target band for middle income countries. So your tax to GDP should be around 15% to 25%. And based on the last number that was released, Ghana's tax to GDP number was around 14%, so 3.9. And it looks like that is not enough for the government. But speaking from the perspective of the people, we are being taxed too much, and government has to find other innovative ways of raising money. And some of the measures that have been mentioned in the previous slide, educating people on tax laws, on tax compliance, etc., would be able to help us increase these tax revenue numbers. Now, on the non-tax area, government mentioned that it was looking to do better in the area of non-tax revenue, which is very important. And it was mainly around the property tax collection, because you look around Laboni, you look around cantonments, there are lots of very nice houses springing up. And if you could raise or rake in a lot of non-tax revenue through property rates, etc., it's going to be very helpful. Now, looking at this tax number doesn't really give you a clear picture of how much Ghanaians are being taxed. So we looked at it in nominal terms. Between 2016 and 2024, government's tax revenue has increased by about 5 times. So all the way from 26 billion to around 151 billion, Ghanaians are being taxed a lot. And in 2025, even though government has taken the posture of, or it feels like government is not really very strong on tax revenue and increasing taxes, etc., government is projecting to grow its tax revenue by about 26% in 2025, all the way to 190 billion. Now, that's a very huge climb. Let's try and compare it to what happened in the previous year. So between 2023 and 2024, government's tax revenue increased by about 37%, which is much higher than this rate. You look at 2 years back, and this growth is about 46%. So the growth is very aggressive. It's still going to hurt the citizenry and businesses, but it looks like it's much more moderate than what we have seen in previous administrations. Now, I've spoken about all of the revenue measures that government has, reason why it's looking at tax revenue, what it intends to do in terms of education and increasing of taxes and introduction of road tolls. Now, what does government look to do? What are its intentions on the expenditure side? The first thing that government mentioned was that it's going to audit and validate all the outstanding arrears. And most of them were in relation to domestic financing for capex. So government is really going to review all of those claims that have been made by contractors. And then also it's going to amend the Public Procurement Acts to ensure that there are key requisites before procurements can be made. So it's trying to enforce really the commencement certificates thing. You need to have a commencement certificate before you can even ask for the money from the controller to even procure some of the things that you want to do. So it's going to audit. Audit is going to be very strong. It's going to introduce the amend the Procurement Act, and then also it's going to enforce purchase orders. In addition to all of that, it's going to have a league table for public financial management, just to ensure compliance. So if your section or your financial management doesn't look very good, government would put your name out, the public will see you, and you probably might have some sanctions. Now, in relation to sanctions, government is going to enforce some sanctions, and all of them are really enshrined in the Public Financial Management Act, and that's in section 96 and section 98. And this means that this is saying that if you breach any of those sections, you are liable to imprisonment of not less than 6 months and not more than 5 years. So you could be in prison for mismanaging public funds, and you could even have sanctions in terms of penalties from around 100 penalty units all the way to 2,500 penalty units. And the penalty units, last time I checked, was like around 12 cedis. So that's a lot of money. So if you misappropriate funds going forward, you are going to face sanctions. And it was very interesting to note that some of these clauses were already in some of the laws that we had. But even with all of that, we saw some of the largest deficits that we've seen in the Fourth Republic. Hopefully, we can curb some of these things going forward. Government also is looking at ending some of the duplicated programs we see in the country. Ghana Cares, You Start, One District, One Factory. There are a lot of questions concerning that, because that could spur growth in relation to the industrial sector or industry. That could really help in raking in foreign exchange by exporting, and then also helping with most of the job creation that we want. But you've seen government also bringing up similar propositions on how they intend to do that, maybe not under the umbrella of the One District, One Factory initiative. What government had also done is that in its expenses, it's not taking straight from government's pool or tax revenue. It's looking to leverage on some of the funds that it already has in mineral royalties, right? And then transfer them to the consolidated fund so that they can use that for infrastructure projects. This looks like a very smart plan on the surface, and hopefully we can be able to implement some of these things going forward. Now, government is saying it's going to cut down on its spending, it's going to audit, it's going to do all of the other things. What does government really spend on, right? And when we looked at the breakdown, most of that was really non-interest expenditure. Now, you ask me what really is non-interest expenditure, and most of it is the subsidies that government gives to farmers and some of the social interventions that government has based on some of the promises that it made when it was coming into power. In there is also goods and services. In there is compensation to employees, wages and salaries, and stuff related to that. So that alone would contribute to around 172 billion Ghana cedis of what government intends to spend. Interest payments around 64, and then capital expenditure, around 33 billion. Now, government wants to spend, but it mentioned that it was going to do so cautiously. Hence, government is trying to implement a shock therapy. So it was very interesting to find that in the budget that government was looking to introduce the shock therapy. What really is the shock therapy? They are trying to do that through spending cuts and then also reducing their financing needs, right? So they are not going to borrow too much, and then also they are going to front load all of their fiscal adjustments. So what that really means is usually governments will want to spread that their fiscal adjustment program in the 4 years. What government is doing is it wants to bring that closer. So it does that really early in its tenure so that in the next 3-4 years, it can be able to benefit from all of that front loading of its fiscal adjustments. And that is, in my opinion, the main reason why you are seeing that conservativeness in the 4.0 growth in real economic, in real GDP. So that is for that. Now, we are seeing a decline. Government wants to ensure that decline goes further in its public debt. So what it's trying to do is it's going to amend the Public Financial Management Act, which I've spoken about in the previous slide, the Section 37. So I was listening to what Setepe was saying during the KPMG budget review, and he mentioned that Section 37 really said that government may create a sinking fund. Now, what government is having discussions on doing is amending the PFM Act, which is the Public Financial Management Act, for that section to say shall create, so that with every single borrowing that we do, government is obligated by law that it should create a sinking fund to be able to cater for some of these obligations that would come in the future. And I think that is a very important step in making sure that government has sustainable debt levels and we don't end up where we were. Now, in the language and in listening to some of the very key government officials across the various platforms, it came up that government is really discussing placing a ceiling on its public debt. It's a similar tactic that you see in the US, where when government is getting closer to its public debt ceiling, it has to go to Congress for Congress to review, ask them questions, and then maybe accept. Government is having discussions on placing the debt ceiling on public debt, which is very good, looking at what it will achieve. Another thing that government is looking to do is to legislate an independent fiscal committee. So this fiscal committee is going to ensure that government stays within its boundaries. It had a similar name in the previous budgets when the previous administration read it, but it's the same understanding. Now, this led us to look deeper. So we went back to that same document that government wanted to amend, the Public Financial Management Act, and we realized that in the act that we already had, there is a section. So section 54 of that act is saying that government is mandated to have a public debt management office. So in the first place, government by that act is supposed to have a desk like that. But I think, in my view, I think it's because of the relaxedness or the political alignedness of some of these offices or some of these departments. Probably that's the reason why we've not seen a lot of independence, because they are looking to set up an independent fiscal committee to be able to take care of our fiscal debt issues. So it's an act that we already have. If government is able to amend that and enforce that, then we wouldn't see some of the restructuring conversations that we had in the past. So that's a good step that's a step in the right direction. Hopefully some of these things can be rolled out and the people of Ghana can benefit from it. Now the shock therapy has translated to the T-bill market, right? And government has been very strong on its position to try and get its short-term borrowing costs really down. And rates are currently around 19% for 91 day, around 16%, 16.9, and then around 15.3% for the other securities. What government intends really to do is to borrow about 36.8 billion at the short end of the curve with at the domestic markets. And then also government is looking to set up an economic policy coordination committee. Now, this came on the back of the conversation that most people had concerning the fact that, hey, rates are dropping on the T-bill markets. Why is the BOG auctions very high? We need to see some coordination. It looks like government is listening to the dialogue that has been had. Government is looking at setting up an economic policy to coordinate some of these monetary and fiscal policies to ensure that we are on the same page. Every single government agency is on the same page concerning some of these things. Now, government is looking to cut a lot of spending, but from the budget, it looks like government has a lot of money to spend, right? So when we total out everything, the estimated allocations that have been done so far is around 45.5 billion Ghana cedis. We've seen allocations to public tertiary institutions through the no academic fees. You've seen nursing training allowances. You've seen free sanitary pads to females in primary schools. You've seen the National Coders Program, where government's allocating 100 million for people to learn how to code, which is a very good initiative. You see the National Apprenticeship Program. You've seen the school feeding program being given 1.8 billion. Now, government's big push 13.85 billion, and Women's Development Bank 51.3 billion. Government looks to have a lot of money, right? And government is spending. If I was an international investor and I saw that my bonds were restructured and government's going around giving freebies, I don't think I'll really be happy. But let's look at it from, let's say you're an assemblyman and you're going to receive your money, you're going to be very happy. So that's on a lighter note. Now, government has gone about on capping some of the allocations that were supposed to go to some of their funds. So there are about 16 earmarked funds in government. So those funds are supposed to receive a certain allocation. Previously, it used to be around 25%. And then the past governments brought it down to around 17.5%. So they reduced the cap. Now, what government is saying is that they want to uncap that some of the funds, just so that governments can give more to some of these projects. And main one of them is the National Health Insurance Levy. So it's going to be uncapped, and about 9.93 billion is going to be given to the National Health Insurance Scheme. It's going to uncap the GET Fund to free resources for the free SHS and tertiary education for persons with disability. So those are very good initiatives that government has allocated money to. Some of the perks are that for the free sanitary pad initiative, for instance, it doesn't look like it's going to be long lasting. Based on the conversations that have been had by different panelists across various platforms, it looks like people were looking for a much more sustainable way of government rolling out this program, maybe making sure that it's going to be much more locally generated, or factories are going to be set up to make sure that we don't come back to allocating money to some of these areas. And these are some of the conversations that have emerged based on the budget. Now, on the very last part of uncapping, government is also uncapping the road fund. It has allocated close to 3 billion for the road fund, just for road maintenance, making sure that some road projects are completed. From the La Beach Road has to be completed, the Teshi all the way to Sakumono has to be completed. There are roads in Takrady, etc., overheads. But why, the question that we are asking ourselves, why were these funds really capped in the first place? So we went digging and we found something very interesting. So the previous government had issues with some of these funds and how they were managing the money that was supposed to be given to them. So let's look at it from the general sense. You know that money will be given to you. You are always going to be allocated 25%. So it looks like they just expect the money. The funds don't really do as much to make sure that they spend well, etc. So government, together with PwC, did an audit. So they put together, they had a strategic document in September 2023. They called it a strategy to streamline earmarked funds. And government mentioned some of the problems that it had with some of these funds, reason why it was reducing the cap to 15 to 17.5%. Now, one of the problems was, so they've named them. So every single fund, so this is the District Assembly's Common Fund, Education Trust Fund, so this is the GET Fund, and then there's a GRA retention, this MIF, this is the Road Fund, and other funds. And they've stated some of the reasons why. And one of them is failure to meet key objectives. Another one of them is most of them have a backlog of audits which they haven't done, and they still expect that money goes to them, right? And the Public Financial Management Act requires that you should run audits on some of these funds. So the funds that were mentioned, key that have backlogs, are the Road Fund and the National Health Insurance Scheme. So usually the backlash is that government is not really funding some of these people. Why is my NHIS card not working? Why is that when I go to the hospital, they don't want to take care of me, etc.? It looks like some of these things are the structural problems that have affected government allocating money to some of these areas. Now, another one of them is irregularities in the use of the funds. Like it looks like they just use the funds. They put them, some of them they allocate in some other areas that they're not supposed to. And then also some of them have gone about securitizing the future funds that were going to be allocated to them. So they expect that it will get 25%. So they've done their calculation and then they've securitized that money, taking money from the populace. When our money comes, we'll just sort you out. And those are some of the problems that were mentioned in that strategy documents. Another key one of them is the fact that out of the 16 earmarked funds, only 8 of them were on the Ghana Integrated Financial Management Information Systems. So that's very long. The whole idea is that every single fund is supposed to be on one platform where governments can be able to see what your expenses are, the amounts that comes to you, what your obligations are going to be, so that it can be able to track your ins and outs of money. But out of the 16, only 8 of them have registered and are on the platform. Now, out of the 8 that are on the platform, only 4 are active. So it means that with most of the funds that goes to some of these areas, government can't see clearly where the money is going to. Main reason why governments reduce the cap from 25% to 17.5%, so that it reduces the amounts that goes to them thinking that that will be a deterrent and will be an incentive for some of these funds to change the ways that they do things. Some of them also had very serious debt accumulation. So one of them is the energy sector, which I've mentioned in previous slide. So this government looks like it wants to uncap all of these funds, right? But there are structural problems that have been audited or that together with an independent institution have been done. Now, the thing that I see that government could use in curbing all of these problems and some of these issues or findings that PwC together with the Ministry of Finance uncovered is government is going to enforce the Public Financial Management Acts, and those are going to place sanctions. Hopefully, it's going to be very strong on the fact that audits have to be done on some of these funds, and the funds are supposed to be allocated to the right use. And then also the Revenue Management Acts, they're going to try and enforce some of these tools to make sure that all of the nice things that they've done, all of the allocations that they've done in meeting government's promises to the people of Ghana, it doesn't come back to hurt them in the future based on misappropriation and use of funds. So that's government's position on that. So the uncapping has two sides. There were problems, that's why it was capped. Hopefully government can be able to ensure strong measures to be able to keep some of these problems out of the way and ensure that our fiscal position is really kept at a very good level. We've spoken about a lot of things. What is government strategy on currency? And if you look at this charts, it's very cumbersome, but all that you see is red. That's the main idea of this slide. Now, what's the government's plan to address this currency issue? Now, government has set objectives, right? It's trying to create an anchor for foreign exchange mobilization. It's trying to increase its reserve accumulation. It's trying to increase currency and try to maintain currency and price stability on that front. And with that, it has set up the gold board to be able to do that. And how it's going to be funded is, or how it's going to be very operational or be an incentive for people, is that it's going to abolish the 1.5 withholding tax on winning of unprocessed gold from the small scale mine. This is going to be very tricky because already a larger portion of the Ghanaian populace is against Galamsey. So it has to be very streamlined. We have to see that proper due diligence has been done with some of these small scale miners, so that Ghanaians can be able to sleep peacefully, knowing that we are not funding education, we are not funding health with something that would destroy us in the end by destroying our water bodies. So that is that on that. And then also it's all of this is trying to encourage small scale miners to sell their gold to the relevant state institutions so that we can curtail some of the smuggling. So in summary, the gold board is really going to be in charge of regulating, overseeing, monitoring, and the undertaking of purchasing, financing, exporting, selling of all gold related activities. So they're going to be in charge of purchasing, they will refine it, they will export it, they'll sell it, the proceeds will come, and then hopefully they can use that, keep that in the reserves and try and use that to create a very strong position for Ghana's reserves. Now, in addition to all of that, the expectation is that they are going to export at least 3 tons of gold per week from small scale miners, and that could really help in our reserve position. So we've said a lot of things. We've spoken about Ghana's inflation targets, what government seeks to do. We've spoken about all of its policies, what it intends to do. Now, beyond 2025, what does government really want to do? Right. Beyond 2025, government looks to reduce its deficits to around 10.4 billion in 2026, reduces deficit to around 8 billion. And then in 2028, government is looking to run a surplus budget of about 2.5 billion, which is very impressive. And it looks like it can be achievable. We need to keep the faith. It can be achievable. Now, aside deficits, what does government look to achieve beyond 2025? In relation to growth, like I said, based on the fact that government is trying to front load its fiscal adjustment, it's not going to spend so much. And usually, growth is usually a function of spending, because sometimes your spending goes into creating jobs, it goes into allowing money supply into the system, and some of that goes into job creation and other areas. Other parts of it also goes into funding inflation. So, because it's cutting down on its expenditure, etc., growth could be impacted. Reason why I'm sure they are projecting a 4% growth, so a decline from that 5.7% to 4% in 2025. And then in 2026 to 2028, government is looking to have moderated growth of around 5% all the way to 2028. So government is not so bullish on growth. And that's mainly because of where we are coming from, right? And I have a feeling that this could also be as a result of the fact that government could be really setting a target that they think they can beat, so that it gives further boosts to investors and people that look at Ghana concerning their investments. Now, if you look at it sectorially, it looks like government is really going to be strong on agriculture, because when you look at the average growth that it's expecting from agriculture between 2025 and 2028, that growth is averagely around 5.2%. If you look at industry, industry is supposed to grow averagely around 5.1, and then services around 4.3. So it means that government is really going to be strong on agriculture. If it's strong on agriculture, food inflation can be curtailed, and we can be able to reach that 11.9%. If we reach that 11.9%, it means that monetary policy rate can comfortably come down. If monetary policy rate comfortably comes down, it means that your GRR will follow, lending rates will follow, people can be able to borrow money, and the rates can go down to about 2-3%. But hopefully we don't get there. So that's really the idea, looking at government's policies. Now, what are the let's try and wrap up, because we've said a lot of things. Now, what are the benefits and the drawbacks of this budget? The positive part for the average Ghanaian and the household is that some of the, in quotes, nuisance taxes have been taken out. Port taxes are going to be reviewed. That's very good, especially if most of our fridges come from outside of the country, so you can buy a very cheap fridge. There's been an increase in the minimum wage by about 10%. Job creation is going to come based on the policies that have been said. Now, the beneficiaries to the livelihood empowerment against poverty, the LEAP program, the households have been increased to 400,000 households from 350, which is very good. So people can get a lot of support, especially those who are suffering. And then also the skill development through the National Coders program. Tech is at the forefront of the next industrial revolution. So government is trying to put in a lot of money, try and upscale, so that we can have some of these expertise in our economy, so that we can grow it through the tech lens. And then also the persons with disability have also been captured, which is very important. I think the last time I checked, they constitute about 4% of Ghana's population, and most of them, if you care to know, are in the Volta region, based on the last report that was done. So it looks like government is being very strategic about some of these things, but overall it's very good for where we want to go and inclusion. Now, the positives for businesses. Now, port taxes are going to be reviewed. It's going to reduce the cost of doing business for importers, because rates are coming down, and hopefully, if inflation drops, there's going to be less crowding out of the private sector. There's also conversation on a review for government's investment promotion center. There's going to be payments based on the money that has been allocated for private healthcare centers, which is very good. Money flows, and then production happens. Now, payment of arrears to the IPPs, the independent power producers, which is very good for the private sector and businesses as well. And then intercity road maintenance, road construction, etc., could boost. We always talk about in social studies, bad roads, etc., when it comes to connecting the producing regions to the main cities, or even getting them to be exported out of the country. So that's very good for businesses. And then Ghana looking to really finance its budgets from domestic sources, and then also purchasing made in Ghana goods. It's going to be good for a lot of the companies. Hopefully, we can see that across. Now, what are the drawbacks of this budget? And the main things that I really picked out was the one-off allocations will not really solve most of our long-term issues, and we need to find a very sustainable non-tax revenue collection. And it's not evident. Non-tax revenue collection is not really evident. Hopefully, we can see that with the property tax, because there are lots of very nice real estates springing up. They should pay property tax. We should be able to mobilize a lot from that area as well. The currency fears haven't really been alleviated looking at the budgets. Hopefully, with time, we can get much more clarity with regards to that. And then also, the growth seems very worrying, because usually those are the things that people are going to judge the government on. So government has to find a way to balance some of these things, so that together we can achieve some of the things that we have set out to achieve. Now, away from all of this, there's an underlying risk, right? And what could possibly go wrong? And what could possibly go wrong is the fact that there are arrears that are in relation to the previous government. Some of them have already been processed. Some of them are going to be processed in this year. And that's probably going to affect government spending. In the very first slides, I told you that government was going to reduce revenue expenditure by 10%. Now by 4%. Now here is showing that it's probably likely that based on the arrears and the payments that government has to do after its audit and validation, that expenditure number could go up by about 1%. And that difference in nominal terms is about 2.6 billion. And that deficit could climb on cash basis to around 56.9 billion. So those are the problems, the underlying problems that could happen to all of these good policies and good strategies that government is setting out to achieve. Now, my very final slide before I wrap up. Overall, I think the more you look at the budget, the more you find loopholes. And the underlying thing that I can say is that implementation will be extremely key. First time I read it, I was very excited. Second time I read it, it became a little bit more gloomy. The next time I read it, it became much more gloomier. So implementation has to be really strong. And then we need to find very sustainable revenue streams in the medium to long term, so that reduction in the tax refund accounts and money flowing into tax revenue will not be something that would really hold on to for a very long term. And then also, I was very happy on the inclusivity fronts on various aspects. And then also the risk in currency with unintended import promotion. It's all of those things are there. When you reduce the taxes at the ports, it could be an incentive for people to import more. And we know our problem with imported inflation, etc. It's something that we have to really look at. And then our social initiative should have lasting financing means, so that we don't always have to come to government. Government should do business that would give it funds. In addition to all of that, I think Mohammed's strong stance on state-owned enterprises turning out profits, and that he'll be marking them and having a meeting with them in the next year, is very important, so that they place less strain on government, especially due to the fact that in 2024, like I mentioned, a lot of grants went to other government units. I'm sure probably because of some of those shortfalls in revenue. So those are things that we need to take care of, and hopefully we can be able to reset Ghana into the Ghana that we want. Thank you very much for staying with me, and yeah, I'm available for questions, and there are lots of people also on the call who can really help with explaining some of these things. So thank you.
Great presentation, Daniel. Thank you very much for the insights. This is a good time to actually hear from people on the call. Participants on the call can actually put up their hands for them to be called, so that they can also share their views, or if they have any questions, they can go ahead and ask. Okay, so I see Prince Agadu's hand up. Prince, All mics have been allowed, so you can go ahead and then unmute yourself and ask your question. Those who would want to also put it in the chat box can do same, or Q&A box can also do so, and we will read them for everything to be answered. Prince, please proceed. Okay, probably it was a mistake. Nonetheless, the floor
Yeah,
remains
hi, can you hear
open.
me?
Yes, we can hear you now, Prince. Go ahead.
Right, great, thank you. Yes, great presentation, Daniel. I picked up your comments on the property taxes and how that will also help in non-direct tax revenue. Um, I think I picked from some of the conversations that we're looking to leverage technology to push that. I don't know if either you or someone else on this call can give a little bit more insight on how much progress we have over there and how that can also help contribute to the revenues to fund the budget or developments in the future. Thank you.
All right, thank you very much, Prince. So your question is on non-tax revenues as well as using property taxes to bridge the gap between our deficits, or basically to fund the budget. So Daniel will take this question.
Yeah, Prince, can I be heard? Yeah, thank you very much for that question. My team backstage is trying to look at what the property rates taxes changing for Ghana in 2023 and probably in 2022, so that we can see from the top level how much we really rake in from property rates. Maybe we'll compare to the top level revenue numbers, find a percentage of that, and then we'll share it in the chat box. I don't my from a personal point of view, my dad always pays his property tax, and he usually goes to the bank to do that. And I don't know if other people in my area do, but if they want to, usually we try and mask things with technology, etc. Governments in the past has rolled out the digital address system, etc. I don't think I don't know, but most of the houses in my neighborhood, for instance, we had different GPRS numbers, and then after a few months, after we had done our Ghana card, etc., those plates were changed, and those plates have been captured in the Ghana card. So if you try and pin my location or my house to that old GPRS number, you wouldn't be able to find me. So there are some structural problems there. Hopefully, the integration that has already started could help, but I can't really give you a firm answer on how far government has gone in relation to using technology in raising some of these some of these property rate revenues. But my team backstage will look at what the number was for 2023 and 2024, and then we'll share it on the page. We'll try and do also how much it constituted to government's top line revenue for those years, just to give color.
All right, thank you, Daniel. If someone on this call also wants to contribute to this particular question, the floor would be opened. I see a question from Emmanuel Kezewu in the chat box. Emmanuel would like to know what should be the takeaway for banks and where are the opportunities for them. So basically, given the fact that we see the treasury yields coming down, and then also given these policies from the budget, Emmanuel wants to know what the takeaway should be for banks, and if there are any other opportunities that the bank should probably be pursuing.
Yeah, I think there are very good opportunities on the markets, especially when you read the budgets. It was very conclusive. It mentioned the fact that the Ghana Stock Exchange had rolled out commercial papers, etc., for banks and other very legit financial institutions that want to fund some of their projects, be able to have banks across the country and in other areas where people don't have accessibility to some of these platforms. So definitely it's a very good time with a very low rates for for banks to really capitalize on that, to be able to raise excess funding at a very cheaper cost. Not only to the banks, I think the corporates can also take very huge advantage of this to start looking at issuing, and Blackstar is always ready to really help you with that. And then also lending, if you are lending now, because a lot hasn't changed with the monetary policy rates, GRR is really not lending rates are still very high. They're not as low as we see on the market, so you can probably take advantage of the very high lending rates now to lend. That would also mean that if you lend more, your lending to deposits ratio is going to be very low, and then you are going to have less to give to BOG. You have more funding to be able to do your other stuff. It's more like a chess game. So there are a lot of things that banks could benefit out of this. Hopefully they can see it because it looks like rates are going to go a bit more down because of the reserves that government has built with new money that it has raised over the past 12 months. So yeah, those are the opportunities that I see. I don't know if anybody has more to add to that.
Yeah, thank you, Daniel. Just to add to all that you've shared, so clearly we can see that the government is on a mission, and so far their strategy has worked to some extent. And I'm referring to the Treasury yield curve. So from where I sit, the obvious goals of the government is to basically cut down on its borrowing cost, and then also to redirect banks' excess liquidity to the private sector. And we see that the government is on the verge of actually succeeding with respect to these strategies that they've taken. We've seen that rates have fallen from the upper 20s all the way to the 19s. And so probably the government may have deferred its need for cash to a later date, for which by the time the need or demand arises, the cost of borrowing would have been reduced. So basically what the government is telling us is that I won't let you lock in cash in the 364-day bill. I would rather send a signal out there which suggests that I want you to put your monies in the short end of the curve. And by the time it matures and you are back to reinvest, rates would have likely fallen even more so that my cost of borrowing would be less. Also, in the plan to redirect excess liquidity to the private sector, in the last 5 or so working days, we've seen rural banks and even commercial banks launching SME loans. And just yesterday, we saw GCB Bank also launching an MSC loan yesterday. So clearly, government is almost through with, the strategy of getting banks to lend to the private sector. Investors may not be too happy because maybe the analysis showed them government's projected inflation rate of 11.9% by year end may be too ambitious. And so they don't see these rate dips as attractive. And that is why you hear people even saying that they are lending for negative returns. But for the general health of the economy, I think this is a positive state in the computation of the GRR, like Daniel mentioned, which serves as the basis for lending. The Treasury bill rate contributes 40% weight, policy rate does 40%, and interbank does 20%. So if the T-bill rate sees a decrease, then obviously it's going to reflect in the GRR rates and a corresponding effect on lending rates, which means that the private sector and then also individual households can get funding at a cheaper cost where they can also employ people within the country, and then households' income would also increase. So, I think the opportunity lies in the private sector where they would get more funding at a cheaper cost, and then also the banks can also shift away from the treasuries and then allocate some funding to the SMEs. I had a conversation with a savings and loans manager who shared his experience with me. He said the SMEs, when they are coming for the loans, their books look so clean and so nice. But once you lend them the money, then everything gets scattered. That was an interesting perspective. But obviously, we should just ensure that our risk management strategies are top notch so that we can identify those who are probably falsifying documents or falsifying their numbers in order to reduce our lending risk. Yeah. The floor remains open for questions. Okay, so Eugene has a question. Based on your explanation to the question on takeaway for banks, what's your assessment of banking stocks in Ghana, or will this be covered later? Daniel, you would like to respond to this one?
Yeah. What was it? The name is Eugene, right? Yeah, Eugene, thank you very much for the question. I remember we had a market color presentation, was it last year, where we extensively spoke about the banking stocks and the fact that it was a good time to go in. If you had gone in at that time, it probably would have made a lot of returns. And those who even went in at the start of this year have made a lot of money. You see how Carl has done. You see how ETI as at yesterday, I think it was above 170% year to date. But in all of these, there's an arbitrage somewhere. Hopefully, by me saying it, it doesn't get destroyed. So the answer to the question is don't just, I think in Ghana, we like a lot of heading. Don't just go with the flow. I think you should look at the numbers, and it's something that we try to do for our clients and people that participate on this call. We share a lot of quick takes that would give you color on some of the numbers in relation to some of these companies so that you can critically look at them. Some of them have pretty good numbers. And by doing your own personal analysis, I think you can come to the very right ones to pick. The ones that are penny stocks, I think you can go in long term. I know people that have made a lot of money from it. Shout outs to you. But yeah, you can also look at going into it. We've already made that proclamation in some of the slides. I don't know how in previous presentations. I don't know how much that has changed, but you should definitely look at the numbers, and you can go on our platforms on LinkedIn, on X, and yeah, you can find most of that. We can also add your email to the mailing list so that you can get some of these numbers and look at them and make informed decisions. So it's definitely good if you look at the numbers. But most of them are penny stocks. You can get them at very cheaper prices now.
Thank you, Daniel. There's another question from Prince Nyako. Prince would like to know, looking at the dropping of T-bill rates, what other short-term investments should individuals look at in 2025? Okay, so Prince, we don't want to see investment as a mutually exclusive decision between assets, okay? So we don't want you to limit yourself to just fixed income. You need to have an open mind when it comes to investment, whereby you can consider other asset classes as well. Because although we see the T-bill rates falling in the fixed income space, it still remains an attractive asset class when you are considering assets with risk adjusted return. So it's still very attractive compared to its peers in that particular space. But we would like you to open up to other asset classes. There are stocks available so that you end up diversifying your portfolio. You can even invest in some mutual funds. There are mutual funds that invest in fixed income, balanced fund, or even equities. There are mutual funds that have exposure outside of Ghana. These are all asset classes or instruments that you can actually allocate your funds into so that you wouldn't be heavily concentrated in a particular asset class. That wouldn't be a good risk management approach when it comes to investment. So broaden your horizon and consider other asset classes. But if you want to be fixated on the fixed income space, the treasury bill still remains an attractive asset class for you. Any other questions, we would be gladly to take them. If anybody also wants to contribute their views with respect to the budget, especially, the floor is open. So whilst people are putting together their views or comments or questions, I would like to run a brief poll to ascertain some of your views on the market and then also the budget that has just been discussed. So quickly, this shouldn't take more than 5 minutes of your time. I'm launching the first poll. So we would like to find out from you what your inflation expectation for March 2025 is. In February, we saw a decline to 23.1. Where do you see March inflation to fall? Is it going to be below the 23.1 we currently saw in February, or it's going to increase? There's also a second question under inflation, and this time around we are taking the longer perspective. So, what's your expectation for Ghana's inflation rate by the end of 2025, given the government's fiscal consolidation efforts? So, like Daniel just discussed from the budget, the government has set 11.9% as its inflation target for year end 2025. By selecting any of these options, you would let us know if you think it is achievable or not. The second set is on the currency. How do you expect the Ghanaian cedi to perform against the USD by the end of Q2 this year? Do you think it's going to appreciate, remain stable, depreciate moderately, or it's going to depreciate significantly? Let me remind participants that as things stands now, the depreciation of the Ghana cedi to the USD is at an average of 5.1%. Same time last year, it was around 6.4%. So arguably, you can consider this particular quarter as a better one compared to that of last year. But what do you think going into second quarter? The next set of questions is on the market. So we've seen rates declining and all of that. People are looking for new investment strategies. We would like to find out from you, what asset class do you prefer whilst we head into the second quarter? Are you still going to invest in treasury bills? Are you going to take some positions in the government of Ghana new bonds? Are you going to diversify into international stocks and ETFs? Or you are going to be heavily concentrated in commodities like gold, or US treasuries, euro bonds, or even deal mostly in FX? In that same space, we would like to know the second question. Do you perceive the dip in interest rates on the treasury bill market to be sustainable? Just a simple yes or no, or maybe we'll do for this one, based on all that you've heard from the budget. Also, we would like to know from you, where do you expect the 91 day to clear at on the weighted average come this Friday? Just give us a value. The next one has to do with the 182. Let us know from you where you think the 182 would clear. And the final one has to do with the 364 day. Now let's shift our attention to the budget, and we have 6 questions on the budget. Kindly note that even when we move on to the next set of questions, you can always go back to answer the previous questions. Please participate in this poll because your views are very, very important to us. Now, on the budget, how confident are you in the government to achieve its budget surplus of 2.5 billion by 2028? Also, which tax policy change do you anticipate having the most impact on businesses in 2025? Is it the increment and extension of the Growth and Sustainability Levy, the abolishment of the e-levy and COVID levy, the VAT reform on motor insurance, scrapping of betting tax, or the decrease in tax refund from 6% to 4%? Also, how do you expect Ghana's tax revenue to GDP ratio to change in 2025? Is it going to be significant, slightly, or stable, or there's going to be a decline? Also, which sector do you expect to drive economic growth the most in Ghana for the year 2025? Is it going to be the agriculture sector, industrial or manufacturing sector, the services sector, or the extractive sector, and we are considering oil, gas, and mining. Next is, what is your expectation for Ghana's real GDP growth rate in 2025? And then finally, we would like to know how satisfactory was the 2025 budget. Are you extremely satisfied, somewhat satisfied, neutral, somewhat not satisfied, or extremely not satisfied? Let us know what your views are. Okay, so that brings us to the end of the polls. Let's go back to the questions and answers and contributions. If there are any questions, we are available to answer them or address any queries from the participants. Also, if anybody would like to contribute, the floor remains open. It would be nice to hear from people on the budget. What are your views with respect to the budget, apart from what you've given to us from the polls? What other views do you have on the budget? What you think are positive, or where you think the challenges would be? Anybody? Okay, let me share mine with you. And this is my personal opinion with respect to the budget. So from the cursory look at the budget, I think you can discuss it from a balanced approach where you acknowledge some of the positive parts, and then also where you think maybe a revision or a more consideration, attention would be needed. So beginning with the positives that I've actually pinpointed from the 2025 budget, and I cannot say all, so just a few that I was able to, identify. So I think the budget provision for 3 or more months of import cover from our gross international reserve is very heartwarming. Like Daniel mentioned, although it's the minimum benchmark recognized globally, at least we have met that minimum standard, and it ensures that our country maintains a buffer to withstand some of these external shocks, which is crucial for economic stability, obviously. Next, I also believe that abolition of the e-levy and emission tax is also to be looked at a brighter side of things. We are going to experience relief for households and then also businesses. These taxes, from my point of view, although were initially aimed at revenue mobilization, I think it placed a significant burden on citizens and also businesses. And so the removal of them would actually improve the disposable incomes of individuals and then also households, which will stimulate economic activity. So I would rather see this from the brighter side. Also, the idea of bridging the shortfall from the abolishment of some of the nuisance taxes, I see that they've introduced some new ones, like, for example, the reduction of the tax refunds from 6% to 4%. This is good, which we believe would enhance our net tax revenue to ensure that government has most resources to fund the critical projects and programs that they have actually outlined. Also, the increment in the growth and sustainability levy on the mining companies or within the extractive sector from 1% to 3% is a good thing. When you go to some other African countries, it's way higher than that. So this is actually a good step. Like Daniel mentioned, this was supposed to end this year. The sunset for this particular levy was 2025, but we see that the government has actually extended it to 2028 and also increased it from 1% to 3%. So in this space, we see some continuity there. We see that a current government is actually continuing some policies or measures that a previous government actually introduced. And so this is good for revenue mobilization on the part of our country. Finally, I am also happy about the review of the PFM Act, which Daniel mentioned. This would allow for a compulsory establishment of a sinking fund, which is good for investors. If for nothing at all, this should stir up confidence among investors in respect of the government's commitment to manage our debt obligations and then also ensure fiscal sustainability, which is critical for our economy. Now, a few challenges that maybe would require more attention going forward would be: first is the 51 million allocated for Women's Development Bank. From what we know, the minimum capital for even setting up a bank is 400 million Ghana cedis. It's 600 million if you want to set up a development bank. And that renders the 51 million earmarked for the Women's Development Fund just like a quarter of the minimum capital. And so I would also agree with the likes of Monacote and others who think the government should rather leverage commercial banks and then also the Exim Bank to ensure, like to have a desk in their offices just to ensure that women's needs are attended to, especially when it comes to financing women businesses. Another thing has to do with the nursing and teacher trainee allowances allocation. I think allocating a whopping 683 million towards this particular initiative is on the high. I would have rather looked at it from the point of view of directing these funds into the welfare of the profession. And I'm talking about the nurses and the professional teachers. At least this would cushion them a little bit in terms of their incomes and probably reduce the exodus of these nurses and teachers outside of the country. I think giving it to the trainees, those who are in school, is a bit misplaced from my point of view. Also, the removal of the betting tax. Um, when you go to countries like Rwanda, they even have betting taxes on both winnings and then also losing. And that has actually discouraged most of the youth in betting. And so I would have wished that we saw the betting tax as a sin tax with the aim of actually discouraging individuals, particularly the youth, from consuming certain goods, and this particular good would be betting. There was a VOA research in Uganda, and it revealed that a health officer ended up betting $1,800 on Argentina to beat Saudi Arabia. And this was money that was meant for a whole community. He ended up betting it on Argentina with the assurances that there's no way Saudi Arabia comes close to Argentina. But we all know what happened in that particular game. At the end of the day, the guy ended up in prison. Also, this same research revealed that most of the people are not even winning, and rather the net income of these betting companies are rather shooting up. And so basically, the youth are getting more impoverished because they end up losing, they end up crying, and all manner of police cases here and there. But my overarching concern with this budget, and even probably previous budgets as well, would be the fact that I don't see prioritization when it comes to industry or industrialization. So we used to have 1D, 1F, which I believe the vision was brilliant, but probably implementation challenges couldn't let us see the best of that effort. We've seen that this current administration has cancelled it, and we've seen the introduction of a 24-hour economy. And when you listen to Gusitano on the 24-hour economy, Gusitano is the lead for that particular policy. It's so brilliant. It sounds perfectly planned. The strategy is so good. It's heavily concentrated in agriculture, agribusiness, and manufacturing. Service sector is not even a part of it. To him, the service sector, all that they need is efficiency. So introduce technology here and there, and all the inadequacies within the service sector would be minimized, or it would even be eradicated. But what have we seen? We've seen some people actually talking about 24-hour economy within the service sector. And that is scary, because if we lose focus on where the attention has to be, we may end up experiencing what happened in the 1D, 1F, where we have a brilliant strategy or a brilliant policy, but implementation challenges wouldn't allow us to see the brighter side of that particular project. It's also interesting to know that the top 3 government allocations in successive governments, 2024 and 2025 budget allocations, are heavily invested in education, health, and then interior. And then in some cases, we saw roads and then also office of government machinery playing a role. I think it's about time we redirect some of our focus or budget allocations to the concept of industrialization, where we seek to actually industrialize our economy by considering specific goods that we think we import too much, specific goods that we think we import too much, and then try to produce them here. And of course, putting comparative cost advantage into consideration. Let me run by you some numbers on our exports. So I found out this morning that of the goods that we export, 51% of it are raw materials. Let that sink. 43% of it are intermediate goods, and just 6% of it are final goods. What this means is that we are not exporting valuable products. We are exporting our raw materials. We are not adding any value to it. And that means our industrialization agenda is being crippled. We would go about parading with import substitution, but the underlying issues that we need to address, we are not addressing them. And so I believe that it's about time we redirected some of our efforts, especially our budget allocations, to see to it that the service sector wouldn't be what actually drives our growth, but then the manufacturing and industrial sector. These are my personal views on the budget. And I believe that although it has some positives, there are a few things that I believe would be challenging and so on and for the matter, probably would deserve a second look at. Thank you very much. 47 minutes past 10. I see there's a last question in the chat box. That would be our last question. Once we are done addressing that, I would like to know the breakdown of tax revenue to accurately assess the tax burden on individuals by analyzing their contribution to total tax revenue. Hey, Prince, this one PhD question, Pao, but I'll let Daniel handle this.
Yeah, thank you very much, Ernest. So when we looked at the breakdown of the 2025 budgets, I mentioned in previous slides that the top line number of revenue that government wanted to raise was around 222 billion, right? And when we looked at the tax side, I remember mentioning 190 billion. Now, when the breakdown that you want is what is under the tax revenue. So when you look at tax on income and property, government expects to raise 97 billion from that. Now we looked at what's the percentage of that to the revenue item, and that's 43%. Now we decided to go back to 2024 and look at what that number was. Now, when you go back to 2024 and you look at what the breakdown in income tax revenue was in relation to GDP, in relation to revenue, top line revenue, income and property tax was 78 billion compared to top line revenue of 151 billion. If you do the percentage composition, that's like 51%. So averagely, it looks like comparing 2024 and 2025, government looks to not raise so much from income tax and property compared to what the previous government did. Now also we decided to look at, okay, what is the income tax, tax from the individual, because I think you wanted to know whether the burden is going to be on the individual, is going to be on businesses. Now, because they are looking at creating more jobs, if you look at the PAY or personal income tax number underneath that 97 billion, it has grown from 2024's 23 billion to 29 billion. So government is looking to raise much more on PAYE and income tax from individuals. And I'm thinking that should be a function of the jobs that they are trying to create. So that makes sense. Then also we decided to look at, okay, 2025, what is the breakdown of taxes on domestic goods and services, so the VAT, the NHIL, COVID levy, and all of those were factored into the calculation of revenue for 2025 in the view that it is proposed and that the tax refund thing is going to cater for all of that. So all of that were in the budgets. When I looked at that composition of what government wants to raise in tax revenue, or comparing it to the main revenue line, that's about 33%. You look at international trade taxes as well, and that's like 12%. So averagely, if you look at it comparing it to the previous year, because of the growth underlining factor between these 2 years, that's why it looks like there's been an increase in the tax expectations of government, but really and truly the compositions have reduced on both sides.
Thank you very much, Daniel. Prince, I hope that was satisfactory. Thank you to all the participants on the call. And then also, we appreciate the fact that you've beared with us. We've exceeded the time, but you still stuck with us. Thank you. It shows that you are interested in all that we were talking about. Before we draw the curtains, let me remind you of some of the products that we have in-house. So our asset management actually manages most of the top performing mutual funds on the market. We can boast of Fixed Income Alpha Plus, EBF, CCMF, Delta, PBF, and then also the Plus Income Fund. Also, within the global market space, we are able to execute trades within the local space and then also international front. So if you are interested in taking positions in stocks, ETFs, US treasuries, or even UK bonds, Euro bonds, among others, you can reach out to us and we would be able to attend to your needs. Let me also add that our analytics, research, and insights team is also always available to assist. Probably you've actually picked an asset class or a security, but you don't have much information about it. If you reach out to us, we can do some analysis on that particular asset or security for you to inform your investment decision. But of course, you would have to buy it through us. Also, if you want more information on all that you saw here today, you can follow our social media handles, including our WhatsApp channel, Black Star Group, or visit our website, blackstargroup.ai, to get more information. We are also going to publish the recorded version of this particular version on our YouTube page, and that is Black Star Group. So go to YouTube and then search for Black Star Group and follow our page. We post all our videos and then also research and analytic documents on our social media pages. Thank you very much for staying with us. We look forward to seeing you come next month. Expect the April edition of Market Color to be amazing. We are signing out. Thank you very much. My name is Ernest Edu Owusu, your moderator for today. Bye-bye.